Hey, this is Mike Adamo, and I am doing a video playbook today. Haven't done one in a while, and I apologize for that. But first, the disclaimers. I don't work for SMB. I'm not an SMB employee. None of this is financial advice. I'm just using the SMB playbook format because I do a lot of playbooks and because I think it is a very effective way to continue to improve my trading game. And I do these playbooks so that I get another rep in my best trades, and also so that if you are bored enough to watch this, that maybe you get a couple things out of it. So here we go. So first of all, my name's Mike. I am a developing trader. I've been trading for a little over 2.5 years. I am in the SMB Tier 3 Trader Development Program, and I love playbooks. I've done... I think this is my 210th playbook. So I really think this is the best way for me to understand trades and to build out my trading skills. So today we're going to talk about one of the best trades of the year for me, which is RKLB from Friday, May 8th. It had a daily breakout. Its catalyst was its earnings day one. And the trade I took was a 5-minute opening range break. But there was also a pretty decent big dog, albeit not the most momentum. And I give this grade an A for the opportunity, and we'll talk about why. So the market. So we've had a huge up move in the market from 560 now to 712. So 712 minus 560... We're up 152 points on 560. So we're up 27% in a little over a month. And honestly, going into the day of this trade, I actually was thinking I was a little short biased because we hit the magic number 700. We had a little bit of selling yesterday or the day before this trade. And I thought maybe we continue on a weaker than expected non-farm payroll number. However, we had a stronger than expected non-farm payroll number. The market gapped up strongly and basically went bid all day. So, very bullish market, very bullish price action, good tailwind for a long setup. And I think the other macro perspective that I have in the bigger picture is that a lot of the mega caps, the Teslas, Nvidias, AMD, Apple, they're also up a lot. And I think that it's very hard now for them without a really individual strong catalyst to go up more. And that perhaps risk is going on in some of the lesser known names like space or nuclear or quantum, these areas that maybe the stocks are a little cheaper. I think those are potential places where we see, if we're going to see continuation of this really bullish market and this speculation, that's where we're going to see growth. So that was another kind of macro check in favor to RKLB. So the ETF filter, risk on, but kind of narrow tape. You can see SMH leading the way again. And you can see that the Dow Jones was kind of the weakest one. Biotech has been kind of weak, defensive, medical devices. So this actually shows that the risk-on names, Russell 2000, solar, cybersecurity, Russell 2000 growth, offensive tech, SMH. So, this is kind of bullish for the day. There's definitely a bias towards, the more speculative areas or the bullish areas being strong and the defensive areas being weak. If you look at the sector map, and this is a bunch of different stuff, you can see the Qs are super strong, SPY super strong, IWM, or Russell 2000 is really strong. Gold starting to kind of consolidate and trend down. The dollar kind of just kind of holding. IBIT's been weak. Bonds have been weak. And you can see that semiconductors has been ripping. I mean, this is even stronger than the Qs, right? This is a big move in semiconductors. And software, which was weak, is starting to bottom and turn up. So overall, kind of bullish risk on tape. If you look at my kind of breadth volatility cycle, you can see the OD lines starting to kind of shrink down a little bit more lower here, which is kind of interesting. But breadth kind of staying high. And you can see that my volume risk on, risk off inflow indicator is a kind of protracted bullish period since the end of April, which is exactly why the market's up 30%, right? So that makes sense. So continuing to be risk on. You can see that we came off the lows. This is looking at the number of SPY issues that are above the different moving averages. So we have the 50-day, the 100-day, and the 200. So you can see big move off the lows in terms of the number of stocks that are above the 50, 100, and 200. But more recently, we're kind of leveling out. We're not putting a bunch of new stocks above the 50, 100, 200. If you look at a year ago, we had a lot more stocks above the 50. But we've got more stocks right now above the 200 than we did a year ago. And probably about the same above the 100. So on the shorter term moving averages, we have actually less above. But on the longer term, we have more. So it's not a buy everything tape, right? It's a leader driven tape. Making new 52 weeks highs. So you can see that we've definitely seen, this is weekly, monthly, quarterly, and 52-week highs. And you can see that, we started making a lot of new highs the beginning of April. We're making less new highs now. So maybe starting to lose a little bit of steam on this rally. But that big extension day on Friday doesn't really show that. So overall, still a really bullish tape. And then the internals were kind of interesting for this, what I would call a trend day. Vold was kind of flat. The advanced decline line was not super strong. And tick, we did see a positive 1,000 tick. But we didn't see like extreme ticks holding up super high. We were kind of hugging that zero line most of the day. So not an extreme rally, but prices did move up significantly. So that's interesting. VIX, the crazy VIX we saw earlier in the year has kind of calmed down. And now, the day of this trade, we essentially were between 16 and 17 and a half with a spike in VIX and then leveling off and then kind of closing kind of where we were. So breakouts, work, individual stocks in play, not a tape that we're going to trade the market. So let's talk about RKLB. So RKLB announced earnings the night before, and their revenue was up 63% year over year, and they beat revenue by about 10 million. So about 5% beat on revenue. The gross margin was 38%, and they narrowed their loss. So last year they lost 12 cents. This year they lost 7, so narrower than expected. But I think the big thing that drove this is their backlog was a record of 2.2 billion, or up 20%. So they can't meet customer demand, right? They have a backlog. And their revenue guide was increased from, 210 million to 225 to 240. And then they sold more launches in Q1 than all of 2025. So that's interesting, right? They brought in more business in Q1 than they did all of last year. So, this isn't just an earnings beat. It's a growth acceleration story. better margins, improving losses, record backlog, increasing guidance, and the other thing is that space has the potential to really accelerate, right? This is the potential of being a hot theme. The SpaceX IPO is expected in June. We're now in the end of the first week in May. So to me, the other part that's exciting about this is we have an actual valid space company that is public. And we have an IPO coming. And so I think that is a big piece, is that we have a hot sector, we have good earnings, we have accelerating earnings, they're better than they were, and we have a lot of excitement for SpaceX. So this thing did 5 RVOL, it had a 7.4 ATR, not a significant short float. It did about 10% of its average daily market volume pre-market. And it's only got 50% institutional ownership, right? So this is an emerging company. This is not, Tesla or Apple or Nvidia. And I think that's why this trade worked. So day one earnings catalyst. I gave it a 9 out of 10. A lot of really good stuff. And also in a hot sector. So the other thing that was really interesting is this has a really nice setup, right? So on the weekly, this has been trending. We made a high back in February of 99.50-ish, pulled back and kind of made a cup and handle-ish type pattern, handle forming a little bit below the highs with a pullback. And that pullback is fairly recent. And so, we have kind of this 95 or 95-ish resistance area on the weekly, I see. And then, this, sorry, the dog had to go out. And then, this all-time high. And then this kind of shelfy area, which will be more clear on the daily. So I call this a breakout in range in my playbook, meaning it's breaking out of a range, but it's in a larger range. So if this consolidation formed up here, that to me is like a higher time frame breakout. To me, this is a breakout in range, but it's got to get through some stuff to get to all-time high. It's got to get through this 93, I called it 95 zone on the daily, and then it's got to get through this like 100 zone on the daily, which is all-time high. But I do think it's interesting because, people potentially got short on this lower high. It consolidates and then it gaps up and it rips through this consolidation right around 85. And I like to call this the shakeout before the breakout. Some of the best breakouts have a shakeout before they break out. And this definitely qualifies as a shakeout with a tight consolidation. So this is an excellent, I want to call this a 9 out of 10. Maybe 10 out of 10 daily chart. Probably 10 out of 10 if the handle occurred near the highs. But this is a stock that already has shown momentum. It's consolidated for a long time. It hasn't seen this level since 2020, the beginning of 2026. So 5 months. And now it's getting ready to break to new highs on earnings. So potential repricing and the SpaceX is coming. So really good technical setup. On the 15-minute, you can see this consolidation level, which we ripped through at the open. I called it 86.83. We had a really strong opening drive. We have a pullback to the 9 EMA on the 15 that it didn't even really get to. It rides the 9 and consolidates and puts in 1, 2, 3, 4, 5. That is the magic number for a big dog. 5 tight 15-minute candles. It then breaks that consolidation on increased volume, being a big dog, and it closes at high of day, and it closes at 105, and it actually goes up to 110 in the after hours. So very bullish price action. So when we go to the 5-minute, we see basically 15-minute strong opening drive, 15-minute sideways, a 10-minute sideways consolidation. Second leg, our pullback into the 9. We hold the 9, 9, 9, consolidate, and then we do our big dog. We consolidate again above, and then we have drive into the end. And I actually found this somewhat tricky. I was expecting more momentum, so that did trip me up. But at the end of the day, it really wasn't a big deal. So that was a good learning lesson for me. So I risked 15% of a daily stop. In hindsight, this was an A trade, and it was worth 30% of a stop. So I definitely undersized this. And I think part of it is just where I am with my development. I'm more comfortable risking more on high beta names like the Teslas, the AMD, the NVIDIA, and these stocks that are more speculative-ish. I just tend to be a little bit more conservative, a little more careful. But I think this shows me that I need to push it when I see the setup. And so I'm going to identify places where I could have been bigger. And I think I could have been bigger on my entry period. But definitely bigger on some of the consolidations because the entry was a little bit more challenging. So other places where you get bigger. I think, as I develop as a trader, my old playbooks always said, that this is the best trade, so I should have been bigger. That's so easy to say, but the reality is it's not the right answer. The right answer is identifying the specific spots where you can be bigger or where you can add. Not just saying, I should have been bigger. Because if that's like a standard thing in your playbook, you're not doing it right. So how did I trade this? So I traded, and I did this on the 1 minute because this rebid is kind of a 5-minute opening range break. 1, 2, 3, 4, 5 minutes, comes down, and then it breaks the 5-minute high. It also, on the 1 minute, kind of love tapped the 9 EMA, so maybe you call us a 9 EMA continuation. But for me, this is a 5-minute opening range break, which is a trade that I've studied, playbook. It's a momentum trade. But in this case, the tape was strong and the entry was good. And so I had the opportunity to hold it because I traded this with 0 DTEs. I did not trade any stock on this until actually way later in the day. So what I did is I bought calls, 95 calls expiring that day. I bought them for 42 cents. My risk on those calls were, call it 20 cents each. About 50% is what I probably would have lost. So I followed Max Gannick's strategy here on 0 DTEs. I was very disciplined about that. I held those 0 DTEs until they doubled. And then I sold half. And what that did for me was it gave me a free trade. There was no way after that I could lose. Even if those 0 DTEs went to 0, I still wouldn't have lost. So I held them. And I held and I sold 50%. And I think in hindsight, this was too much. But, it's always better to trade defensively than too offensively. And I sold half into 95. As you recall, that was a higher time frame level. And that was my first target. And honestly, it got there so fast that I thought it was smart to take it off. Again, this is the 95 zone. We could have very easily failed the 95 zone. However, we did not. And so I held my second half of the trade into 100. And remember, we opened at 86. So I basically held, we were up 10 points, which is about an ATR and a half. And then we did another 5 points. So we're up almost 2 ATR now. And we're struggling at the 100 zone. And I actually held through all of this. But I expected it to break here. It didn't break. I expected it to break here. It didn't break. I expected to break here. It didn't break. And then the third time it came to 100 and it started to roll. I didn't sell. I actually decided that there was a better process, which was to sell my which was 95s, which are already in the money. They're acting like stock. There's no benefit actually of holding the equity, the option over the stock at that point. In fact, there's a risk, which is the spread on it's like 50 cents. So you're talking about $50 per contract spread. So, you kind of get killed on that spread if you need a lot of liquidity for that spread to tighten up, and sometimes it doesn't. So I sold liquidity to 100. I sold my calls into 100, and I traded it dollar for dollar in stock. I was already up a big time realized P&L, like 60% of a stop. And I had a bunch of unrealized. So I just traded into stock. And my idea was to hold for 105, but somehow when the momentum came in and then didn't come in, I allowed myself to get shaken out. So that was a mistake. I did make a couple more points here. So all in all, I made about almost 2 daily stops on this trade. So definitely not a bad trade, but there was a huge opportunity here that I just didn't capitalize on. You can see the options pricing here. So that's me selling 50% at a double, which is kind of laughable. But I think that is the process, and I'll continue to follow it because in zero DTEs, this is a better way to hold. This is why Max does it. You sell half because then you're risk-free. And with the amount of premium that comes out of these things when you get a down move, you got to. I mean, look at how much premium came out. I sold another 50% into the 95s, and then we went from $4 to $2. Half the premium gone in 1 hour. So that's a good sale. And I've locked in a nice profitable trade here. And so with that other 50%, I'm letting it run. And if I had let it run, it goes up to like $12. So remember, I bought this for 42 cents. I had my sales at $5. So that's a 10 bagger. This trade was a 10 bagger for me. So a 10R trade. If I managed it differently, it would have been 15R. So definitely good opportunity to improve. I think trading out to the stock was the right call, but I should have held the stock. And if anything else, I actually should have added into that position. So how I should have traded it is I should have entered with 30% on that 5-minute range break. Closed 25% of my options position at 95. Add 15% of a daily stop in stock when we broke this longer consolidation. Sell 25% of the stock into 100, and then hold the entire position and then add on the big dog more stock, and then sell it all in the close or swing some of it. So there's some opportunities to do this better without just randomly saying I'm going to get bigger. So reading the tape. Let's see if we can see the tape. So you can see that this thing was very aggressive off the bat. Little whippy. This feels like 10x, but it's not. So off the bat, we're doing 3R roll. And you can see bigger picture. Oh, we just broke that range. So that actually was the better place to get in. Not the pattern, but the break of that range, risking probably low a day. I think you could have done 30% on the break of that range, risking low a day. I mean, I know it's early in the day, but you have a strong catalyst. You have a strong technical setup, and it puts you in a better spot. But I like my call position. So I'm waiting, a few minutes to get into the calls, so basically 9:36. I apologize. It's getting late here today, so I'm not as excited about doing the entire tape today. But it's posted, so if you want to watch it, you can watch the tape yourself. But you see this pullback now? We're at minute 9:34, and we're getting that pullback. So to me, this is enough on a strong opening drive on a day one that if I see us push up through that high, with volume and the bid steps up, this is a place for me to get involved and risk to basically the middle of this kind of like not really range. It's kind of more of a rebid in this one than a 5-minute opening range break, right? So the bid drops, sellers take control, but they can't really get it far, right? You can see the buying pressure start to step in. You can see the bid step up. And you can see the battle, right? But look, we're already pushing up again. So it's barely able to hold it down. In fact, we make a new high. Oh, at 9:35. Oh, because it's a 2-minute bar. Yeah, so in the 1 minute, you can actually see the pullback. That was it. When we rebid that high, that was the entry. It's clear on the 1 minute. That's why I like trading these in the first 5 minutes on the 1 minute. And I rarely trade in the first 5 minutes, but this was a reason to trade in the first 5 minutes. And you can see, look at the strength of that bid now. It's just stepping up. So you can watch the rest. I also have the big dog in here on the tape, so I'm not going to cover it ad nauseum. So technology, you guys have seen that slide before. So what did I do well? So I think this was great stock selection. I traded my plan and I followed a disciplined exit process. Yes, there were definitely places I could have been bigger. There was definitely more opportunity to make money on the trade. But, good trading is good process. And I followed my process. And my process was sell 50% of the options into a double. Sell 50% into the 95 strike price. And then try to see what happens at 100. And then if we can break through 100 with momentum, keep holding. And I added on the fly to the idea of switching out from options to stock, which I think was smart because it managed my risk better. And what do you know? What I learned? Switching from stock to options stock. I could have also traded up my strikes. Would have been the other way to do this. So what I can do better? Follow the plan and hold to the close. I was telling my pod I was going to hold this thing to the close. And at the end of the day, I think I just exhausted myself watching this too closely. Honestly, this is the kind of trade where I probably just could have left it on. And so I think I just kind of mentally wore myself out. So that's good kind of awareness. Size it right. B was undersized. And I could have pressed the big dog more. But it also required patience. It wasn't the best momentum big dog. It worked. But the momentum really came in as a closing imbalance. It did not come in as a momentum trade after the big dog. Usually, and I trade a lot of big dogs, I expect to see a lot of momentum on that break. And the break was kind of slow, grindy. We got momentum, which I was like, all right, here it comes. And then it retraced like a big chunk of the move. And that got me out because the best big dogs don't do that. And so the fact that it rebid, held up, and then had a closing imbalance wasn't part of how I see the best big dogs playing out. But giving the higher time frame perspective, given the price action throughout the day, given that it's space and it's hot, I should have been involved. But in a way I am, because I have two calls that in my long-term account that I'm holding on this thing for next Friday to see if we don't get a little bit of a swing out of it. So all in all, great trade. One of the best of the year for me, and definitely one to study. So if you have any thoughts, questions, comments, or concerns, hit me up on the SMB Discord. And I hope you get something out of it, because I know I did.